Good evening, everyone. My name is Sam Strama, and with me today is Casey Hines and Samantha E. Today, we will be presenting our analysis of Costco Wholesale Corporation, covering its business model, key risk, valuation, and our investment recommendation.
For our investment strategy, our team is recommending a 9 to 12 month buy on Costco. The key strength of this decision is Costco's recurring revenue engine. They generated about $1.2 billion in membership fees in just quarter three alone, with renewal at about 90% worldwide. This creates a predictable, high margin revenue base that compounds earnings regardless of what's happening in the broader retail market. Costco's consistency also shows up in its operating results. While the retail industry grew only 0.1% last April, Costco grew nearly 6%. Earnings per share continue to improve, and e commerce is expanding at double digit rates. On top of that, the company holds nearly $14 billion in liquidity, giving it exceptional stability even at its current premium valuation of about $9.20 a share. Turning to the analytics, our discounted cash flow is built on 5 years of Costco's financial data from 2021 through 2025. We calculated an average free cash flow of about $6 billion and applied a conservative 4% growth rate. Discount rate we used was 8.5%, which was based on a 4% risk-free rate, a beta of 0.98, and a 4.5% equity risk premium with a 2.5% perpetual growth rate. The model gives us an intrinsic value of roughly $255 per share. While that's well below Costco's actual market price, which is near over $900 per share. However, the discounted cash flow model only values long-run cash flows in steady state, while the market consistently prices Costco's quality premium, which includes its recurring membership revenue and proven ability to outperform in both inflationary and recessionary environments. To assess risk, we ran a scenario analysis. In the bear case, with lower growth and higher discount rates, value still holds around $174 per share, showing that Costco's cash flow remains resilient even under recession conditions. In the bull case, stronger consumer demand lifts valuation above $370 per share. Across scenarios, the company shows stability, growth, and limited downside, which ultimately supports our institutional buy recommendation.
Turning to Costco's management dynamics, several factors highlight the company's strong institutional support and internally aligned leadership. Looking at the management factors of Costco, we see that our stock is largely held by asset managers. Costco is a core component of the S&P 500 and other large cap indexes. It is included in the EFT offerings of asset managers such as Vanguard and BlackRock, explaining their large ownership. This means that Costco stock benefits from structurally stable demand for the stock and institutional confidence in the company. Costco insiders, such as the executive suite, demonstrate confidence in the stock, supporting a strong positive outlook in the company. Insiders bought considerably more shares over the past 6 months than they have sold. Costco has incentives that tie to the compensation of executives to the stock performance, granting them stock options and aligning the interests of the board, the shareholders, and the management. Costco is known for offering high value wages for the retail sector and generous benefits, which lead to loyalty and high motivation across the workforce. Moving on to risk management. One of the most significant risks to Costco's value is tariff pressure. About a third of Costco sales come from imported goods, primarily from China, Mexico, and Canada. So recent tariff implementations create meaningful uncertainty around cost and product mix. While Costco has had to absorb some of these costs, its flexible product assortment helped maintain strong customer retention even when sourcing shifts. Despite these pressures, Costco has remained resilient, continuing to post increases in online sales of about 90%, comparable sales of roughly 7%, and in-store traffic of over 4%. As of recent news, Costco is suing the Trump administration to recover tariff payments, arguing that the tariffs imposed under the International Emergency Economic Powers Act were unlawful. The company is seeking a full refund of the duties paid and joins several major firms pursuing similar challenges. The case is now part of the broader Supreme Court review of the law limits. Beyond tariffs, the competitive landscape also poses risk as Costco competes with large warehouse retailers like Sam's Club and BJ's. These competitors can replicate the membership model and often do so at a lower price point or targeted discount, which may create pressure on Costco's pricing and membership growth. These dynamics could challenge Costco's ability to maintain its core value proposition of low prices and high quality products. To close out, Costco presents a reliable and resilient investment opportunity, supported by its membership-driven model and exceptionally strong customer loyalty. Our valuation work shows meaningful downside protection and compelling upside potential, reflecting Costco's consistent cash flow generation and defensive position within the retail sector. Although external pressures such as tariffs and competition introduce risk, Costco's scale, sourcing flexibility, and ability to adapt its operations allow it to navigate these challenges while maintaining its value proposition. Considering these strengths, along with its consistent financial performance, our final recommendation is to buy Costco within a 9 to 12 investment horizon.